In this video, we're doing a detailed top-down analysis of gold and AUD/USD asset classes and also touching briefly on fundamentals as well. So, with that being said, welcome and welcome back to my YouTube channel. My name is Abigail, aka Sabi Abby, and I drop trading related content on this channel. Please subscribe to the channel to stay updated with the different posts that we put up right here on this feed. Alright, so let's get straight to business, shall we? I'm going to be starting my analysis on the monthly time frame. I like to have a clear picture of what the higher time frame like the M1 is doing as well. So I'm going to go ahead and mark out what I believe to be our OTE, as the ICT traders will call it, expecting price to return into the zone so we can continue the structural move downward. To confirm our trend on the weekly time frame, you can see that everything is still pointing downward heavily. Our major structure is to the downward side, with the minor structures, which are the buys, currently buying back into what we would now consider our point of interest to continue the overall move of AUD USD to the downside. On the daily time frame now, you can see that consecutive higher highs and higher lows are being formed, although price failed to take out this zone around this level. Price failed to take out this level. However, I still expect price to push upward back into this higher time frame point of interest so we can continue to sell AUD USD. I'm going to be touching on the 4-hour time frame as well, looking at my most recent price action, which happens to be point A to point B. And if I'm going by that, I'm going to now mark out this zone using the Fibonacci tool, which helps me to calculate my retracement levels, expecting price to now continue selling from where it currently is, following most recent price action on the 4-hour time frame. And so that price already tapped into our 50% Fibonacci level. So let's go to the 1-hour time frame and see if we have some sort of confirmation. And yes, we do have that. Price trading to this level and does now giving a confirmation, or rather a continuation pattern. You can see that I already have my trade. I already placed the trade on this particular asset class because I came back to the 5-minute time frame to now look for my confirmation, which happens to be a variation pattern. So candle 1, 2, and 3 I've entered at this zone. My stop loss is about 30 pips and my take profit is 60 pips. I'm going to give this my first shot of the sell continuation of AUD/USD. But if price breaks above this zone and takes me out, then I know that the next level of interest is where we marked out earlier, which is all the way up here. So price takes us out now. Wait for price to come back into the zone and give it a second shot. Alright, now that we have a clear view of AUD/USD, the systematic approach I like to follow is to touch on technicals and then Forex Factory, just to see if I have any news release that pertains to the asset class that I'm looking at per time. And today is March the 26th. You can see that we had one come out on the AUD current earlier, which is the CPI. What was forecasted was 2.5%. What came out, the actual, was 2.4%. Now if you look over here, you see what it measures and its effect on the asset class. The CPI measures the change in the price of goods and services purchased by consumers. So actual greater than forecast is good for a currency, meaning more strength will go into the currency if we see what was forecasted come out to be lower than what eventually comes out. But in this case, what came out was lower than what was forecasted, showing some sort of weakness, right, on the chart. So now that we see this, I'm expecting more sell-offs of the AUD. Although, even when this news release came out, it didn't really do much on the chart. But following this, gives me more confidence or more bias for why AUD/USD will eventually tank, right? For now, these buys are retracements for us to continue selling, but if this level holds, then we just may see the continuation of AUD/USD sell, which just makes sense or happens to make sense with what we saw come out fundamental wise. Okay, now that we have this in view, I'm going to look at the currency strength meter as well to see what the strongest and the weakest asset classes are. You can see that value is currently going into commodity currencies, CAD, NZD, and AUD, and the weakest currency is now the yen. So I am now looking at what I'm currently looking at selling AUD/USD. Should this level hold, right? So I'm looking at selling AUD/USD, but if price does not hold, then we see price retracing back all the way in here. So if price happens to do that, then we just may see even more strength moving into the Aussie. But we're going to keep watching. Remember that that first entry is a first shot, and if that doesn't hold, then we know that more value is going to go into AUD and we're going to keep buying. But this just calculates what is happening per time. So I'm still going to hold that sell off and take it down. If not, second entry will be somewhere around here. Let us now look at XAUUSD because that's also something that has my attention at the moment, looking at the monthly time frame, very similar to what I did on AED/USD. And you can see that the first thing that captured my attention on the monthly time frame is this flip zone, which happens to be in confluence with a fair value gap. So I've gone ahead and I've marked that out. This is now my monthly POI. On the weekly time frame, another POI also happened to catch my interest. You can see I already set an alert when price comes into here so that I will be informed, right? So I'm expecting price to now retrace into this zone or into our weekly point of interest, which happens to be another flip zone and a fair value gap as well. Right, on the daily time frame now, same thing. So we're doing this top-down analysis step by step, time frame per time frame, to have a clear picture. So price is now going to come here. This is what I expect gold to do. I'm seeing price coming all the way down here. Maybe fill 50% of this FVG or even the entire 100% of it and then continue to buy. If not, price is going to violate this zone and trade into our next POI, which happens to be somewhere around here, and then continue to the upside. So on the 4-hour time frame now, you can see that structure has now started breaking to the downside. I took a sell of gold. I was part of this reversal, but that was a low probability trade because it was against the trend. Now, as a trader, at every point in time, you want to be trading in sync with the trend, overall trend. That is what we consider that's what we consider high probability setups. When you're trading against the trend, oftentimes I consider them low probability setups, and in those scenarios, I just cut down my risk to be different from what I would ideally enter the market with in a trend following trade. So I'm now expecting price to trade back into the zone and meet my confirmation entry on the 1 hour. If this zone holds, I'm going to be buying gold. If not, then we're going to be waiting for the next opportunity to present itself. Overall, on gold, I am heavily bullish. In fact, I believe that the buy on this asset class is just starting. Now, gold's rally is a combination of macroeconomic factors, investor sentiment, and even technical breakouts. So whether it is inflation fears, a weakening dollar, or a geopolitical risk, traders and investors turn to gold as a hedge and a safe haven asset. So you know that we've all seen the craziness going on in the market with the different news releases just popping out from nowhere and causing a lot of chaos on the chart. So I believe this is why we see so much rally. This is the highest that we have ever seen gold ever. You can look at that all the way from 1833 if there was anything happening here. But yeah, so this is the highest, and these are the reasons why I think gold has been rallying and gold may continue to rally. However, early on, I was just scrolling through platforms when I happened to come across this headline stating that Russia and Ukraine are agreeing to halt Black Sea attacks. So it means that they are calling ceasefire. Now, what does this mean for traders? You remember that I stated that gold is traditionally viewed as a safe haven asset that attracts investors during periods of geopolitical tension. The announcement now of a ceasefire can lead to reduced demand for such assets, which is gold in this case, potentially causing a decline in gold prices. So for instance, following discussions between Ukraine and US exploring a potential peace deal with Russia, we saw that gold prices started to retreat from record highs. Right, gold price started to retreat from record highs. So now that we see this, I still expect it to move further down and eventually continue to buy. But you can now see that the different steps that are put into perspective when trading. For me, it is not just the charts. I put into consideration fundamentals and also sentiment. So I work on a trading floor, and we have certain sentiments that we call our value flow models that guide our decisions on why we pick asset classes to trade. If you're interested in learning that, you could just send me a DM and I'm going to set you up with the academy to take a class on that and we'll guide you through all of that, right? Okay, I'm also thinking of setting up a community for traders where we send markups to each other every now and then and just stay in touch and grow together. If that is something that will be of interest to you, let me know in the comment section and I will work towards building that. If you watched to this point, thank you so much for watching to the end. If I was too fast, which I think I was, let me know so that I can reduce my pace in the next video. With that being said though, thank you. Please do not forget to subscribe before leaving this channel. Cheers, God bless, and have a profitable week. Bye.